and a warm welcome to Tax File. I am your host, Lawe Bala Hassan, and today's episode promises to be a blend of knowledge, perspective, and practical insights on taxation in Nigeria. We'll kick things off with tax news, your quick guide to the latest developments and policy updates you should know. And did you know we'll share interesting facts that could help you make smarter tax decisions? Then we'll take it to the streets in our Vox Pop segment to capture what Nigerians think about current tax matters. We'll unpack those opinions in our knowledge zone, giving you deeper understanding and clear explanations. Up next, Professional Insight brings the experts to the table, helping you connect tax policy to real-life impacts. And finally, What's on the Net showcases your online questions and reactions. And of course, we'll be responding to a few of them too. It's an informative and engaging lineup. Let's dive right in. And now, the news. The chairman of the Nigeria Revenue Service, Zak Adedeji, has called for a fundamental shift in Nigeria's economic strategy, urging the country to move away from dependence on raw material exports and embrace innovation, ideas, and the production of complex goods. Amachibu reports.
Dr. Adedeji noted while Nigeria boasts a high-tech oil sector, much of the border economy remains trapped in low productivity informal activities. He lamented the absence of vibrant labor-absorbing industrial base capable of bridging the gap between raw resource extraction and advanced industrial production. The NRS chairman urged that countries that successfully transition to prosperity do so by building capabilities in complex industries, sectors that generate higher income, create quality jobs, and drive technological advancement. He stressed that tax policy and revenue administration must align with national development goals by incentivizing productive investment, supporting industrial expansion, and encouraging export-led growth.
Similarly, the chairman of the Nigeria Revenue Service, Zak Adedeji, has dismissed claims that the new tax laws impose additional burden on poor Nigerians. Swatete reports.
Dr. Adedeji reassured Nigerians that the new tax laws do not impose taxes on personal or corporate bank savings. He dismissed widespread speculations that account balances or transfers could trigger automatic deductions, clarifying that only profits and returns are taxable, emphasizing that the reforms are designed to protect citizens rather than increase their burden. He explained that the new tax framework is built around logic and accountability, ensuring that incentives stimulate real economic growth and cannot be exploited. He urged Nigerians to remain confident in the system, assuring that the NRS is committed to transparency, fairness, and supporting economic activity rather than stifling it.
And the executive chairman of the Nigeria Revenue Service, Zak Adedeji, has further explained the application and benefits of Nigeria's new tax regime. He said this while addressing public concerns and highlighting reforms designed to strengthen fairness and accountability as he appeared on TVC's journalist hangouts. Ejura Etu Ofanachi.
The chairman of the Nigeria Revenue Service, Zak Adedeji, has dismissed claims that the newly introduced tax laws impose additional burdens on poor Nigerians. Speaking on the matter, Adedeji emphasized that the reforms are designed to create a fairer system, ensuring that those with greater financial capacity contribute more to national revenue while protecting low-income earners from undue hardship. He explained that the government's focus is on broadening the tax base and improving compliance among wealthier individuals and corporations rather than targeting vulnerable citizens. According to him, the new tax framework is part of a wider effort to strengthen Nigeria's economy, enhance public service, and promote equity in revenue generation.
And that's a wrap on the news. Let's join Miriam on the Vox Pop segment.
Hello and welcome to the
segment. My name is Mariam Jumbi Adira, and today we will be looking at penalties for failure to make attribution under the new Tax Act. Come. What penalty applies for failure to make attribution under the new Tax Act?
The penalty that apply for failure to make attribution under the new Tax Act is 1 million naira.
Okay, when you say under the new tax act, I believe is the NTAA. So under the act, it provides that the administrative penalty should be 1 million naira when you fail to make attribution.
Attribution.
I'll say it's an indirect obligation as the government gives as individuals to an entity or a person to collect and remit tax on their behalf.
I think failure to make attribution under the new Tax Act will attract an administrative penalty of 1 million naira.
By virtue of Section 106 of the Nigerian Tax Administration Act 2025, a person who is required to make attribution but fails to do so, or having done so, fails to notify the relevant tax authority, is liable to pay an administrative penalty of 1 million naira.
Well, the penalty for failure to make attribution is an administrative penalty of 1 million naira.
Is it a one-off or is it weekly, monthly, yearly?
It's a one-off penalty.
The taxpayer is liable to 1 million naira administrative penalty.
Is it monthly or weekly? What's the frequency of the penalty?
It's not monthly, it's as it occurs.
It's a one-off. Okay. What is attribution?
Attribution is allocating income or transaction to the actual beneficiary.
Failure to make attribution under the new Tax Act, I think that's 1 million. And I mean, attribution, and to explain it further, I think this is talking about the allocation or disclosure of income, source of benefits or expenses based on the transaction. So I think it's 1 million.
So when you say based on the transaction, could it be more than 1 million?
No, it's 1 million. So for instance, let's take for instance withholding, like I said, tax deduction, withholding at source. If a taxpayer peradventure withholds a particular amount of money from transacting with a business, you are supposed to deduct that withholding within 1 month of that transaction. So if such taxpayer fails to disclose the source of that money or fails to remit that deduction, then they are liable for the 1 million. So that's why I say based on the transaction, it's usually like monthly thereabouts. So it's one-off on the transaction.
Thank you.
Person who is required to make an attribution does not do so, they are liable to pay an administrative penalty of 1 million naira. For more information, please visit www.nrs.gov.ng.
Ashu Abi takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations had on the streets. I remain your host, Ashu Abi. On today's episode, we'll be talking about what penalty applies for failure to make attribution under the 2025 tax law. Under the Nigerian Tax Administration Act 2025, there's a specific administrative fine for failing to make an attribution. If a person who is required to make an attribution does not do so, or if they make the attribution but fail to notify the relevant tax authority, they are liable to pay an administrative penalty of 1 million naira. This provision is set out in Section 106 of the Tax Act, and the penalty is intended to enforce timely and accurate reporting in tax attribution matters. In addition to this administrative penalty, the broader framework of the 2025 Tax Act also contemplates more severe consequences for tax offences where applicable. For example, individuals or entities convicted of offences under related compliance sections may face criminal sanctions, including imprisonment of up to 3 years or fines not less than the principal tax due up to 50% of the sum owed, or both. These additional sanctions help reinforce the seriousness of compliance obligations under the new tax regime. Over to you, Lauren.
And now to our professional insight segments.
Theophilus Ovenetega Adego. I am presently the Group Director of the Workforce Development Group. The Workforce Development Group were expected to be a high-level strategic position to manage and implement as much as possible clear, actionable plans for all the service in terms of learning and workforce development. Our mandate is to have the service skilled, knowledgeable, and trained well enough to deliver not only on its mandate currently, but to be future ready for all other developments and initiatives that will grow our mandate to the nation. Inside the group, we have 2 departments. One, the services, the NRSA, as the Nigeria Revenue Service Academy, and then the Learning and Innovations Department. Both are targeted at workforce development, as we call it, to provide ready, necessary, and comprehensive learning opportunities, both physically and virtually, using technology especially, to get our staff, our population, to deliver not only on our mandate, but also in the academy, stretching beyond our immediate constituency to external parties who will wish to get trained in our peculiar activities. When I say peculiar, I mean activities and mandates of the service. First of all, simply put, we have created a situation where there is an arm that creates the demand for learning, and there is another arm that is the supply and delivery arm of learning. The Learning and Innovations Department is, as we call it, the demand arm, where they are the ones who do the learning needs assessments. They are the ones who look at each person, department, group, directorate, depending on their functions, depending on their needs, to generate what they need to learn. Let's use that word, learn. I would like to move away from the word training, which connotes the old system. So what they need to learn. Also designing the kind of learning that is appropriate for not only the person based on their learning needs, functionally or personally, or for personal development, but also the departments, the functions, the directorate, the groups, depending on their strategic direction. Not every learning opportunity must end in physical face-to-face learning, which obviously most of our people prefer. But also there are enough reasons to now move digitally, to now use technology to drive even self-learning better. They now want to bring learning to them at their desktop, at their convenience, their phones or gadgets, where it is easier to be able to do this in your own time, in your own space, in your own place, at your own pace. Then they are also going to be monitoring and evaluating every program in Learn and Innovation to ensure that whatever programs are going to be delivered, whichever way they are going to be delivered, are fit for, not only fit for purpose, but also create opportunity for future improvement of the person, of the department, of the function, of the directorate. L&I department is not going to be using resource persons as such. That is the delivery arm, the academy. That's where the trainings will be delivered from. But the Learning and Innovations Department, as I say, will be the ones to do the needs assessment, find out where the gaps are, what kind of learning will be appropriate to fill those gaps, whether it is virtual, whether it is physical, whether it's international, whether it is on-the-job training, whether it is peer-to-peer coaching and things like that, whatever means. But now, having generated that need, which is now the demand, it is passed on to the academy, the NRSA. From those demands, they will develop appropriate curriculum, design the programs, then design the programs following whatever style of learning to deliver the program. So if we're delivering it online, if we're delivering it virtually, if we're delivering it physically, if we're going to have to deliver it in any form, like a webinar or any process we're going to use for it, they will then design appropriate curriculum, appropriate content to meet the exact needs of that, for that gap to be closed. They will also, at the end of the day, do their own assessment of their own delivery, point out areas where there is need for improvement and for the future, which will also now go back to the Learning and Innovations department to take that feedback to know how to improve or push the needle upwards to ensure that at the end of the day, the service gets full benefits of a highly trained, highly skilled, as we always say, future-ready staff workforce. We developed over the years some mandatory programs. Some are onboarding programs, which are meant for all new staff. Of recent, like last year, when we onboarded over about 3,000 new staff, we ran virtually a full gamut of what we call our Foundations of Taxation program. It was a suite of about 14 modules, which previous to last year we were delivering physically. Our recently implemented learning management systems platforms. We, by the way, have 2 platforms running, but used one of them to deliver those
suite of 14 modules of training or of programs to all new staff, and they did it. They went through it, passed the test all online before they even resumed. We are also right now converting a lot of our physical programs which we developed over the years. We are now going to convert them into virtual modules and also load them on our LMS. They are available online to every person to learn for the first time or to refresh themselves at any point in time, and also as reference materials as you go on in your work. And it's not limited to only tax area, which is about 80% of what we do. It is also going to be spread to every other, functional area. We have various leadership programs that we had previously developed, particularly our executive leadership development program. We're also putting it now on that platform. And this is a program that's developed for senior leaders at the verge of being promoted to the directorate level. We started also last year a monitoring and evaluation unit, which we're going to develop even bigger now within the two departments, where every program we must be able to calculate a return on investment to the service. We have assessment points which we also now develop to ensure that every person that goes through training will be able to know to an extent the kind of value they must deliver back to the service when they go back to their jobs. The major challenge we've always had with, as we call it in the service, training, has always been that one of people complaining about not being trained. Now, while the training is not that there was no opportunity to go or attend the program, it is that if it doesn't come with DTA, an allowance for you to travel somewhere for the training, it's not termed training. So when you are even doing online, we are facing this real challenge, resistance to online training, because you don't have to travel. Now you have to do it yourself. So we're going to be challenged as we are putting more of our programs online. We are going to have a lot more resistance to people attending, but we are also developing along the line incentives to make people go and do that.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Swateku. At Abdul Latif is asking, Mr. Taiwo Idele recently made a statement that personal accounts do not require tax identification number. Why are you confusing us? At Abdul Latif, there is no contradiction. Personal bank accounts in Nigeria do not require tax identification number TIN. For individuals, the bank verification number BVN is enough. A TIN is only required for business accounts, such as companies, enterprise, or organizations. So to be clear, personal accounts requires BVN only, while business accounts requires only TIN. At Ayodeji says, we hope to see better results and improvements in the services as you embrace development to take Nigeria economy to the next level to complement federal government. At Ayodeji, thank you for your confidence and expectations. We remain committed to improving our services, strengthening transparency and embracing modern technology to support Nigeria's economic growth. Our goal is to work closely with stakeholders and complement the efforts of the federal government in building a stronger, more efficient and prosperous economy for all. Over to you, Laurie.
And that's a wrap on this episode of Tax File. We hope today's discussion has helped you see taxation from a fresh, more practical angle. Remember, learning about tax is not just about compliance, it's about empowerment. Stay connected with us on social media. Share your thoughts and let's keep the conversation alive. I am Lorraine Bala Hassan. Thank you for watching. Until next time, stay curious, stay compliant, and keep watching Tax File.